Hey guys, it's Kim at Property Mom. Today for our 2-minute tidbit, I'd like to speak about mortgage financing. So about a month ago, we had a home that was sold. We were just waiting for the closing to happen. And it was about 2 weeks before closing, the other realtor called and said that their buyers are asking for a 1-month extension. So this is a red flag right off the bat. Obviously my seller was a little concerned, so the further we dug into this, we found out the purchasers for this home that came in with cash on this offer, because there were multiples, were not okay for financing. Okay, the other realtor said that they were not approved now for bridge financing. My first question was, is their home sold? He said no. So this to me is kind of confusing that this would all happen. So I just want to kind of explain how bridge financing works. Once your home is sold, and let's say there's a gap between the home that you're selling and the home that you've purchased, there's a 2-week difference in closing dates, the bank most times will allow you to get a short-term loan for that period. They lend you the money and then they get their money 2 weeks later, okay? So that happens quite often, but your home has to be sold. Unless you have some other type of collateral, the bank usually will not approve you unless your home is sold. Another thing is that when you're going into multiple offers, a lot of times you may be tempted to not put in the condition on financing. Well, if you don't have cash, I would not advise it. Just because you've been pre-approved for the mortgage does not mean that the bank has approved the home. So let's say you've paid $250 for the home, the bank asks for an appraisal of the home and the appraisal comes out at $200. You're only putting 5% down. Now there's an issue, okay? Obviously, you're gonna have to come up with the difference. You've come in with the offer with cash and now you won't be able to close. Another thing is that there's a difference between pre-approved and approved. When you're pre-approved, the bank is looking at details. They're not actually looking at the documents. A lot of times you'll call a bank, you'll say, my income is this, my debts are this, and they say, yes, you're pre-approved for $200,000 based on what you're telling me. Once you put an offer on a home and it's an accepted offer, the bank will want that. They get the accepted offer, now they're not only checking you out further, they're also checking out the home. So they're gonna ask for letters of employment, T4. If you're self-employed, they're gonna ask for a lot more than that, and it could get even more in depth. So my suggestion is never go into an offer without condition on financing unless you have the cash. That's all. Have a great day.